Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at a very popular crypto AI chart, and specifically it's the Fetch.ai chart, which in recent weeks has started to correct again. So we want to take a look at where the price could potentially turn around and start the next rally from. Let's go. Okay, we are on the Market Intel website, dailymarketupdate.com. You can find the link in the video description. You can register for free and you get access not only to our crypto updates, but also updates about stocks. But today we navigate to our cryptocurrencies section. First of all, we want to take a look at the outlook for FET on the long-term chart. Yeah, for this main third wave rally, we want to talk about that third wave perspective here first. It is currently our perspective that a wave 2 bottomed recently in our trading area. It's grayed out. Important is to keep this upside expectation alive that you see here on the chart, where the price could rally in a third wave next. The market should hold above the 5.2 cent level down here, the red line. No break below should happen or we will have an invalidation. Now that level is quite far away from where we are now, of course, so there are other support levels on the smaller time frame that we can track. But overall here expectations are for the price in this third wave to rally to at least $6.24. This is one of the typical Fibonacci extensions and like the first ideal target of this move to the upside. Yeah, obviously prices can go higher than that. That's not a maximum. It's the first ideal target, but we should keep expectations kind of realistic. We'll see if the market can extend further when we get closer. Then we might even be able to calculate that target area a little bit more precisely. But you can see that overall expectations would be a rally, and the third wave is typically the strongest rally of a cycle, and then another higher low, like a corrective pullback, and another higher high. So how does this all work out down here? Do we have a high confidence setup for higher prices? Let's take a look at it. And we can take a look at it on the smaller time frame chart. Now you might see here or you might recognize here the percentages. So this is our probabilities calculation. The idea is that this here is a corrective move, a corrective pullback after a rally to the upside. And this is, as I said, the smaller time frame. So in our preferred scenario, in the primary scenario, the market should ideally drop down a little bit lower into the area between 81 cents and $1.09. That's a trading area for this wave 2 corrective pullback, which is unfolding as a flat correction. Now that takes us to the probability. So with a probability of 37%, the low is ideally already in. I mean, ideally, but that's what we assign to our alternative scenario. That's the alternative, that the low is already in. In the alternative, blue wave 2 here, it bottomed already and we're moving higher already. But again, we only assign a probability of 37%. That means we assign to our primary scenario 63% probability, which means it should go down a little bit lower before we actually recover. And we base that on the ugly microstructure here. It's very corrective, overlapping, looking from the recent low. And therefore it makes more sense to us, and also based on the wave pattern, looking at microstructures, that there could be another dip into this area before we recover. But ultimately on this chart, it's about, okay, have we already bottomed, or do we get one more low before we bottom out? And then from there, a third wave rally on the smaller time frame could unfold, which would be very much in line with the overall larger degree thesis. So that would be something like a third of a third wave, so a very bullish move. It hasn't started yet. It might happen in the next few weeks. It's difficult to say when something like that is playing out or how long it takes, but overall expectations are still for higher prices. We would ultimately then also expect the market to break above those recent swing highs and to follow through on the bullish expectations and the bullish wave count. And this here is a smaller time frame setup that could set the stage for a strong rally in a third wave. So that's the update about Fetch.ai FET. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure that you register on our website. You can do that completely for free. Also let us know in the comment section which are the cryptocurrencies you want us to cover going forward. Thank you very much. Bye-bye.